Curious about investing in Chat GPT? This video is for you on how you might be able to build a portfolio around Chat GPT and artificial intelligence without some of the downside risk, potentially. Let's take a look. Microsoft's obviously working on their $10 billion investment into OpenAI, but what I really think is most fascinating about this is the amount of money that is going to potentially go into GPUs. This is another potential area to pay attention to. You look at GPU revenue forecasts. You see a little bit of actually a stall there in 2022 where GPU growth has this sort of compounded annual growth rate of 14% measuring from 2017 to 2026. And we see billions of dollars of revenue here. We can see between 2021 and 2022, revenue is almost flat, sitting somewhere here around, what do we have, 21 maybe billion here in GPU revenue forecast. However, we see that exploding again via estimates by over 20% in 2023 via estimates, and then steady growth all the way through about 2026. So a lot of excitement also in the chip space for potential GPU growth, especially with companies like OpenAI maybe driving reinvestments into chips. I did find the server refresh cycle article I was talking about yesterday. I had it saved, just put it in the wrong place. And really it was an argument that the more companies invest in AI, the more we're going to shorten the replacement cycle for chipsets. However, you might see more of an investment also into hyperscale cloud. Obviously, hyperscale providers being companies like Google, Facebook, Microsoft, Amazon. There's a belief that Google might actually, according to Bloomberg, have an advantage over Microsoft in distributing servers for AI. So server space or server power or compute power for AI over Microsoft. And then, of course, NVIDIA seen as a substantial player for that GPU push for data centers. Keep in mind, every single query for Chat GPT, so if you've used it and you've prompted Chat GPT with something, every single query is estimated to cost about 7 cents of compute. So that money obviously goes somewhere, right? And that money is going to cloud providers, and it's going to chip providers like NVIDIA and AMD, and it's trickling through to chip manufacturers like Warren Buffett's favorite investment, Taiwan Semiconductors. Taiwan Semiconductors has 92% market share of the advanced microchip sector. Of course, then you have a lot of folks that look at companies that also manufacture. You're kind of going through the supply chain line here of OpenAI, right? You're looking at, okay, well, if AI is great, then AI is probably good for a company that has an investment in it like Microsoft, but then it's also good for server providers like Google. But if it's good for server providers, it's probably good for chip providers like NVIDIA and AMD, probably more heavily NVIDIA. But if it's good for chip designers, then it's good for chip manufacturers like Taiwan Semiconductors. But if it's good for chip designers and manufacturers, then it's probably also good for the companies that make the manufacturing machines, like ASML and Lam Research, who just reported pretty solid earnings yesterday. Honestly, they have a phenomenal balance sheet. We looked at that yesterday at Lam Research. Phenomenal balance sheet, phenomenal cash flow, really impressive. So when you're thinking about investments into a space like Chat GPT, really, you could get a basket of the entire market that may have pricing power as a result of artificial intelligence. I'm actually personally not the biggest fan of looking at profitless tech companies that say, hey, invest in us because we have AI. For example, I'm very gun shy about a company like C3 AI. I'm not super enthusiastic about a company like Snowflake. Even though I know they're expanding like crazy, I am worried about the SaaS business model still not having reached a bottom. A lot of layoffs happening in tech, which is going to lead us to less seats, less substantial growth at some of these companies. And I hate to say it, but some of the valuations for software companies are insane right now. Just as an example, Bill.com trading for 100 times PE. I mean, you're looking at PEG ratios that are 3 to 6x for some of the growth some of these companies are expecting, and valuations that are very sensitive even beyond a PEG ratio to falling. Any company that tends to have a high PE ratio, no matter what the PEG ratio is, can oftentimes be a sell in recessionary environments, because it's simple for them it's simple for institutions to argue, oh, it's a high PE ratio, sell. But even a company like Snowflake, which is expected to have a positive EPS this year, expected to be positive about 23 cents by the end of the year, expecting to be positive by about 50 cents, which is great growth. I mean, that's doubling on EPS, right? But you're trading for $144 with 50 cents of earnings for the year. You're trading for 288 times as a multiple for Snowflake. That's insane. Absolutely insane. I mean, even if you gave them a double for growth on EPS, which is not sustainable, you're still trading for a 3 PEG with a 288 valuation, and the likelihood that more money has to be raised. Now, a rising tide will eventually lift all ships. But if I potentially had to structure something that I thought was really exposed to the pricing power of AI and Chat GPT, probably my biggest investments would be companies like NVIDIA, AMD, Taiwan Semiconductors. I would consider ASML. I would consider Lam Research. Although I have to put a little asterisk on the manufacturers, because a concern about the manufacturers is that maybe companies like Taiwan Semiconductors have already bought a lot of equipment in the last year, and that maybe there could be a slowdown in growth going forward for some of these manufacturers. However, ASML did just report, and what they report? They report that they still expect manufacturing equipment sales to actually increase by 25% in 2023. So my thesis isn't actually being super well corroborated to say maybe stay away from those equipment manufacturers. But right there, these are 5 potentially great stocks for investing in AI. If you then wanted to look at cloud distribution, a simple exposure to Google, Amazon, Facebook, and Microsoft could be a consideration. Now, I do have concerns about a lot of Facebook's cash flow going into things like the metaverse. I'm not the biggest fan of virtual reality. Even Apple expects their virtual reality headsets to just be a loss leader for other products. So with Facebook, you do have a bit of an anchor that some of your cash flow might be going to, the future of the metaverse. So you have to be comfortable with that as an investor. Facebook stock has actually done decently over the last 6 months in its recovery. Amazon, you have to be careful that on their side, you're seeing a lot of cash flow get thrown into how can we get quicker delivery time frames to continue to be competitive in our fulfillment networks, and I think that's a very expensive endeavor. And so maybe that makes Microsoft and Google slightly more pure plays for cloud compute. That would be your Microsoft Azure, your Google Cloud Platform. So look at what now all of a sudden we're potentially building this portfolio of companies that maybe have pricing power around artificial intelligence without being exposed to the insane multiples of multiple exposures of AI, of strictly AI, right? Which is heavily exposed to software service companies that are extremely expensive right now. I mean, even companies that I like in the cybersecurity space, like CrowdStrike and Cloudflare, great companies, but pricey, very pricey right now. But either way, maybe you introduce a small exposure to companies like that, right? That could be a consideration. So maybe if you're building a portfolio and you say, hey, I really want to be exposed to Chat GPT, how could I build a portfolio of, say, 11 stocks around that? What kind of stocks would I consider? Well, I on screen here, I just kind of slap this together while we were talking here. And I wrote just sort of in order of something that might look like a decent portfolio. You've got number one, well, just reading them off in order here: NVIDIA, AMD, Taiwan Semiconductors, ASML, Lam Research, Microsoft, Google, Amazon, Facebook, Meta, and then maybe Snowflake at the bottom, right? So this is an example of how you could build a portfolio, and then what you could do is you could maybe provide a lower allocation for some of the more cloud providers, not cloud providers, the more pure AI plays, then maybe you would be allocating to some of the others, right? And too bad you can't ask Chat GPT for stock picks, because the data is for Chat GPT still stuck in 2011. But even beyond that, you have to be pretty tricky with how you try to prompt it for stock info, since it likes to tell you. It doesn't want to give financial advice. But anyway, look, the more AI blows up, the more we actually expect that we are going to see the chip world have to reinvest in itself to stay competitive. Now, you have to be careful, because big tech is laying off a lot of individuals. So again, with layoffs in big tech, you're probably going to see more pain. Where? In software as service. But what does that free up? If you lay off white collar workers, what do you have more of? Well, potentially you have more cash flow. And if you have more cash flow, what can you do more of in a recessionary environment? Well, hopefully you do what I regularly suggest. And that is, in a recessionary environment, you invest. That, I think, is extremely exciting. Invest, invest, invest. And so this is where, if I pop on over to a piece that was sent over from Bloomberg, somebody sent me this. They sent me, look at this: AI infrastructure spending poised to stay elevated. There's a long runway for companies to replace their legacy servers installed base with AI accelerators. Now, honestly, I think that's kind of remarkable, because I feel like I still, and I know servers obviously have been around for, 50 years, probably more widely over the last 20 years, obviously, since the dot-com bubble. But it's weird to me to think that, all right, time to upgrade, but all the servers. But then again, I try to relate, and I look at my Apple computers, for example, and maybe this is just Apple screwing us, but this is how they get their pricing power, right? But you go pick up a 2018 Apple laptop, which I have a few of. I have like 3 or 4 2018, 2017, 18, 19 laptops sitting around from previous employees or us having upgraded. And I've used some of these for just other purposes. I turn them into like little server backups and that. They're terrible. It's incredible how miserably slow they have gotten. And I think it's just relative to what we're used to here in 2023 now. And so it's really incredible. So when I think about that as an individual, I'm like, yeah, no kidding, servers are going to need upgrades, whether those are new hard drives or new network area storage bays. NVIDIA has seen rapid adoption of its GPUs for data centers beyond its customer use cases for gaming and Bitcoin mining. Beyond that, right? We're moving beyond that. Autonomous driver is another secular driver for GPUs, but Chat GPT has the potential to further unlock new computing use cases. Folks, there is so much money in artificial intelligence that you don't actually have to bet on the artificial intelligence company like Chat GPT, which is not a public company. It is not a company you can invest into, and it's really only a company you could get sort of ancillary access to. But it is a movement where the additional free cash flow that is now going to go into artificial intelligence research and investments is probably going to pump quite substantially the distribution and operating systems for AI at massive companies throughout not just the United States but the world. And I think it's a win for all of the companies that I mentioned. You've also got companies like Tesla, heavily exposed to AI. The more they double down on AI, the more you're going to see a movement towards chip investments at Tesla. Now, of course, Tesla designs a lot of their own chips, but at any point, that they need to purchase chip manufacturing equipment or third-party contract manufactured chips like NVIDIA or AMD do. Guess who's a beneficiary of that? Well, potentially companies like ASML, Lam Research, Taiwan Semiconductors, right? Apple investing in AI, who benefits? Well, substantially Taiwan Semiconductors. The more Apple invests in AI, the more we see their chips designed by Apple and get manufactured by companies like Taiwan Semiconductor. So personally very excited. I am not as excited, although it might be worth the potential exposure into companies like an Intel or an IBM, although these companies have been seen as potentially not innovating as quickly as some of the other companies that we've mentioned. So it's something to pay attention to, is that maybe you have an exposure to sort of the rebirth of an Intel and IBM, and maybe therefore in a portfolio, if you have an Intel and IBM, what you're able to do is put them in as maybe a 12th or 13th position in sort of a Chat GPT allocation, and you see those maybe as a little bit more value-esque in the whole bucket. So obviously, I can't advise you how to ideally build your portfolio, but at least for building a portfolio for myself, these are considerations that I have. The nice thing about stocks is you don't have to say, oh, it's all in on one stock or it's all in on another stock, and oh, I'd never touch a certain stock with a 10-foot pole. You could just allocate less money to stocks that you believe in but have concerns over valuation, right? That way, if you're wrong, at least you have a stake. And if you're right and the valuation compresses, well, then you could really start building that stake by adding more of an allocation. And this really goes back to the idea of how difficult it is to time perfect tops and bottoms, and it's better that when things are a little frothy to under allocate, and when things are pained to over allocate, right? And then that way you just adjust that way. So I personally am very, very excited about Chat GPT, and on almost a daily basis, I'm looking at how can we rebalance portfolios in a way that give us the best potential allocation to the future, essentially future growth in the ad space and AI space, rather, not the ad space. Ad space still also good, and I think AI and compute spend will heavily increase in even the ad sector and the compute power for providing connected TV advertising or digital advertising, but certainly less so. Ads would be certainly less so than AI. But AI, very, very exciting. Keep in mind, even Elon Musk yesterday mentioned that AI might be the essentially, that Tesla may be the leader in artificial intelligence. Of course, he might be a little bit biased. Anyway, some thoughts here. If you found those helpful, make sure to subscribe, share the video as always, and of course, check out those programs on Building Your Wealth link down below. Coupon code expires the final one in 4 days. And you've got a price guarantee over there, folks. 3-month price guarantee that you'll be getting the best price probably ever, but at bare minimum for 3 months.